Good morning and welcome. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Like the name suggests, we'll tell you everything that you need to know before the start of trade. Let's start with the headlines. US markets cheer Fed's dovish pivot, and all benchmark indices close at record highs, gaining for at least 6 consecutive sessions. Stock futures, however, are showing a slight sign of profit booking. Dow futures are currently trading with a marginal loss. Oil prices have rebounded in trade as Brent maintains a positive trajectory this morning after gaining close to 4% intraday yesterday. Back home, markets rally fast and furious. The terrific Thursday alone adds over 3.8 lakh crore rupees or $46 million to the BSE market capitalization, while investors gain over 5.5 lakh crore in wealth this week so far. Euphoria does not seem to fade as the Gift Nifty indicates yet another strong start. It crosses the 21,400 mark. The euphoric wave stretches to the buzzing primary markets as well. In Inox India IPO, which opened yesterday, gets fully subscribed on day one, while DOMS and India Shelter Finance get subscribed 15 times and 4 times respectively. On the macro front, we've got wholesale price index-based inflation, which turned positive after 7 months in November. WPI inflation stands at 0.26%, driven by a sharp increase in food prices. And Dr. Reddy's Laboratories becomes the first and only Indian pharma company to debut on the Dow Jones Sustainability World Index. UPL, on the other hand, becomes the first agrochemical company to be included in the index. And the Israel-Hamas war rages on for the 70th day, even as the UN General Assembly voted for a non-binding resolution on a humanitarian ceasefire. Israel Prime Minister Netanyahu says no international pressure can stop the war. Now, US stocks gained overnight, and they have continued to gain, and the yield on the 10-year has settled comfortably below that 4% mark. The benchmark indices in the US closed at record highs yet again. The futures are pointing at the possibility of a little bit of profit booking at the end of the trading week. Bloomberg has reported, by the way, that economists at some of Wall Street's largest banks are now calling for the Federal Reserve to roll out interest rate cuts earlier and faster next year. Goldman Sachs, for one, has said that it now expects the FOMC to cut 25 basis points in March, May and June, with further moves on a quarterly basis after that. Meanwhile, JP Morgan has changed its view on the start of the easing cycle to June from July. Oil, meanwhile, seems to be on an upward trajectory this morning after gaining about 4% intraday yesterday on OPEC's improved demand outlook for 2024. You're looking at NYMEX on your screen, but Brent crude was trading at over $76.5 to the barrel last I checked. Asian markets are mostly positive this morning, with only China looking a little cautious. They're awaiting key economic data out of China, including the November house prices, as well as industrial output and retail sales data. Now let's turn attention back to India, and the question is, where do we go from here? All-time highs comfortably placed at well above that 21,000 mark. Agam's here to tell you about how to look at the new week from the options side, right? We saw expiry yesterday.
Yeah.
Where do we go from here, Agam?
Well, I reckon the markets would want a little bit of breather, Alex, even as we move into holiday season now. That's likely to play out, but you never know. We still have 2 entire weeks before we move into the new year. That said, as far as markets are concerned, yesterday we did see them climb even further. In fact, at one point in time, we were around the 21,200 mark, and we saw a staggering 18% increase in open interest towards fresh longs. There was some amount of expectation of a little bit of moderation, temperance as far as the index futures go, but that really didn't come through, and the markets, in fact, ended near day's high. So we have seen a lot of strength. The question is, can we expect a little bit of profit taking in today's day of trade, considering we've had a very, very strong week, and I reckon a lot of traders may not want to carry those positions forward over the weekend. That said, as far as your Nifty futures go, well, as I mentioned, 18.5% increase in OI. Coming down to the Bank Nifty futures as well, we're seeing further unwinding even as we see an increase of around 1.5% in its underlying. So strong cues coming through, but unwinding as far as your banking indices are concerned. Let's talk about the options market now. Now that we have seen the Nifty move over 21,000 and comfortably take out that particular strike, the call concentration in that particular strike has dissipated completely. Remember, on Thursday, it was the one with the maximum open interest, and now all the activity or all the writing activity is shifted around 21,300 to 21,500. On the other hand, a substantial amount of writing around the 21,100 puts. So that's the near-term support that we are working with, at least in today's day of trade. And as you can see, it was the puts largely which were the most active yesterday. So naturally, a lot more writing around lower-level puts. Coming down to stocks and those which were seeing a lot more activity, there was a lot of buying across. And SAIL, Manappuram Finance, along with something like an Exide Industries, continue to see longs. PI Industries continues to see some weakness, along with ICICI Prudential, which did see some shorts building up. And coming down to those stocks, which saw unwinding, short covering in Nalco, SBI Life and M&M. And of course, GMR Airports and Dr. Reddy's continue to see long unwinding. On the whole, a very strong day of trade, Alex. I reckon even if we see some amount of consolidation today, we're likely to see some strength as we move the next week.
Absolutely. And thanks so much, Agam, for wrapping that up for us at the start of the day. Let's talk about one of the top stories today, and that is the fact that India has notified its decision to appeal the panel report on technology tariffs in a complaint filed by the European Union with the World Trade Organization. Now, in May, India had appealed against a similar report in a case initiated by Japan. 3 panel reports by the dispute settlement body of the WTO were circulated to members on the 17th of April, and that was after complaints that were made by the EU as well as Chinese Taipei and Japan regarding India's tariffs on information communication technology products. The panel reports ruled that India's import duties on certain IT products are inconsistent with the global trade norms in all cases. Now, India's second appeal in the case against the EU was circulated to WTO members yesterday, according to the latest information from the trade body. The appeal comes at a time when India is expected to resolve the WTO import duty dispute with the European Union on certain information and technology products through the proposed free trade agreement, which is under negotiation. That was the last major story that we heard in this matter. All right, now let's talk about individual companies and, of course, sectors that you should focus in on. And cement, we believe, is something that you should be looking at very closely. And now, we have seen shares of cement companies rise in the recent past, and perhaps to a certain extent, that is on the back of an expectation of improved fundamentals for these companies. Mika is joining in with some research that she's done to tell you what the tailwinds are that are playing out in the space right now. Morning, Mika. So one, on the pricing front, it's looking really strong, and also equally the inputs are looking good as well for them.
Yes. So the cement companies in the past, they've seen a surge. Now this has been mainly on the back of, capacity enhancements and stock-specific developments, but there are also some structural tailwinds that stand in favor for the companies. Firstly, there's an uptick in price, which is cement prices per 50 kg bag. Despite a 1.4% month-on-month dip in November, the average price of a 50 kg cement price all over India has risen 4% this quarter, which is in Q3, which takes into October and November into consideration when you compare it to Q2. And the price rise is expected to boost the revenues. Breaking down from a regional price growth in Q3, the southern region has experienced the highest increase at 6.8%, followed by the east and the north at 5.9% and 4.6% respectively, while the west and the central regions have shown relatively lower stable growth at 2.9% and 0.2% respectively. Now, when we talk about another positive, it's the decline in the input costs. Raw material costs like crude oil, pet coke, coal and diesel stand very crucial to fueling the kilns at cement companies, and they constitute around 20 to 30% of the total cost. Now, while diesel prices have remained fairly stable since May 2022, Brent crude prices have fallen 16% since October 1st. Domestic petcoke, which is also a byproduct of crude oil, in December saw a 7% month-on-month drop and a 24% year-on-year drop. In November, import coal prices also experienced a 12% monthly drop and a 46% year-on-year drop. Additionally, in Q2 FY24, logistic and power and fuel costs, which are main two costs for a cement company, have decreased across major companies as they've shifted their focus on optimizing the key costs. On an annual basis in Q2, the aggregate logistic and power and fuel costs for major companies saw a 3 and 22% reduction. And this trend has also been observed from Q4. As you can see, from Q4 to Q2 FY23, Dalmia Bharat has been leading the decline in logistic and power fuel cost decline, followed by Ultratech and JK Cement. Now, these cost optimization efforts also contribute to improve the EBITDA margins and overall net profit growth for the companies.
And that is certainly something to watch out for when the earnings season starts once again, to expect to see an expansion in margins. But there's also another aspect playing out, which is on the demand side. So that is also looking strong, and that is the third tailwind, right?
Yes, exactly. So there is a surge in demand, and this was observed in the Q2 sales volumes that indicated a robust uptick in real estate and the infrastructure demand. We had a Ramco Cement that observed a 37% year-on-year growth in sales volume, followed by JK Cement and ACC at 22 and 17% respectively. And for Q3, Motilal Oswal predicts a 6 to 7% demand growth. So now October saw double-digit expansion in growth, but November experienced a dip around 4 to 5% due to the festive season, which is usually marked by construction and labor availability dragging down the demand. But Motilal does expect December to see strong demand driven by infrastructure projects, commercial capex expenditure, and they also expect a rebound from the demand from the individual housing and rural segments. And these favorable factors set a stage for a substantial margin expansion for cement companies in Q3. Now, over the past years, if you see, all the major firms have witnessed healthy EBITDA margin growth. And last year, in Q3 FY23, we also saw a scenario where cement prices were 1% up and crude prices were down 2%, and all the cement companies except JK Cement achieved a triple-digit basis point expansion.
Thanks so much, Mika, for breaking that down for us. Cement back in focus. It has been gaining, as we said, for quite a while now in the recent past, last few weeks. We have to slip into a very quick break. We've got more stock-specific action on the other side, so do stay tuned. Welcome back. You're watching All You Need to Know. Now, this is where we tell you about the stocks that you need to watch out for in trade today. And of course, in yesterday's session where you saw broad-based moves and you saw gains across the board, IT stood out as a pack to watch, certainly. The question is whether banks will participate in trade today and, of course, over the coming days as well. We've got a few individual stocks to watch and to tell you about. And my colleague Pragati Oberoi is joining in to give you the key details about the financial stocks to watch in trade today. Morning, Pragati. What do you have for us?
Morning, Alex. You're absolutely right. So, as of yesterday's trade, I have three main stocks on my radar this morning. One is a bank, that is the Jammu and Kashmir Bank, and we've been tracking it for last couple of days as well. And I have two NBFCs as well. I'm going to go one by one and explain to you the rationale that why I'm choosing them. First, the Jammu and Kashmir Bank Limited. So, the bank has raised 750 crore via a QIP. So, as of yesterday, that is the 14th of this month, it has approved the closure of the QIP that opened on the 11th of this month. The entire capital issuance committee met yesterday and it approved the issue price of the QIP at rupees 107.60 per share. Next, moving on, as I mentioned before, I have two NBFCs on my radar. One is the Satin Credit Care Network Limited. This company as well opened its QIP on the 14th of this month, which is yesterday, and the floor price was set as at 242.81 per share. Moving on, the third one on my radar would be Fusion Microfinance Limited, another NBFC. Now, the interesting bit here is that there was a huge bulk deal that happened yesterday. In fact, two of them happened, and about 10.2% of the stake of the company was sold. As per BSE, or the information that we have from there, these two companies were Honey Rose Investment and Creation Investment Fusion. These were the main sellers. The interesting bit here is that the sale price was set at 555.6 a piece, which means that the demand from the seller side was also pretty high, which shows that there's strong potential as far as the sellers are seeing. So these are the three stocks that will be there on my radar.
All right, thanks so much, Pragati, for bringing us those details. Let's focus in on a few more stocks. And in fact, there are some significant news updates with regard to tie-ups that have emerged as well as order wins. And we've got Varsha to tell us about three stocks that will be in focus. One of them, Adani Enterprises.
Good morning, Alex.
Morning.
So let's start with Adani Enterprises. So we have Elbit Systems has picked up 44% stake in Adani Defense System and Technology. Now this is to develop manufacture various autonomous aerial technologies and systems for the defense applications. Also, Adani Defense System had signed a shareholder agreement with Elbit System for 44% stake in Atharva Advanced System and Technologies. Now Elbit System has subscribed to 7,857 equity shares issued by Atharva Advanced Systems. And now if you see, Adani Defense Systems and ESL now owns almost 56% and 44% respectively of Atharva Advanced System. Then we have Bharat Heavy Electricals, where it signed new MOUs to collaborate with Central Manufacturing Technology Institute. Now this is to develop technology in areas of hydrogen value chain and IIoT solutions, and this technology is for predictive maintenance of machines and manufacturing processes. Then we have IRB Infrastructure Developers, which emerged as a preferred bidder. Now the project is for tolling operation and maintenance of Kota Bypass and Cable Stay Bridge. Also, the trust is to pay upfront concession fee of rupees 1,683 crore to NHAI, and the trust asset portfolio will increase by 4.3%, and the project is to add almost 1,800 crores to order book of IRB. Lastly, we have Ami Organics, where it signed agreement with Fermion, which is a subsidiary of Orion Corporation in Finland. Now this is to manufacture two additional advanced pharmaceutical intermediate for Fermion, which will be used for captive consumption for already signed two agreements in November and September. Now this will enhance the overall value of the final advanced intermediates, and also the manufacturing will be in Ankleshwar facility. Now this contract will actually bring significant contribution to the revenue in FY25.
All right, thanks so much for bringing us those details, Varsha. This is a disclaimer that we need to give you because we did mention Adani Enterprises. NDTV is a subsidiary of AMG Media Network, which is an Adani Group company. All right, now railway stocks will be in focus today. Indian Railways is set to buy trains worth 1 lakh crore rupees, and that's according to the Railways Minister who spoke to a pink paper today. We've got Mahima Vajrajani who's joining in to tell you more about the recent order wins and why you need to pay attention to a few particular railway stocks. Mahima, over to you.
Right, Alex. So before I move on to the stocks, I would like to just mention what the Railway Minister said to the pink papers. He said that till date, the National Transport has sent approximately 70% of the 2.5 lakh crore which was assigned to railways, and they're doing this to replace currently the rolling aging stock they have. So 7,000 to 8,000 new set of trains are needed. The tenders will be floated in the next 4 to 5 years, and it needs to be honored in the next 15 years. The investment that they are aiming at by 2030 is approximately 12 lakh crores, because this will be needed to cater the current economic growth that we have. They've also said that as per recent developments, the Eastern corridor has been completed, and it is catalyzing the new industrial hub and Gati Shakti cargo. 80% of the Western dedicated freight corridor is also completed, and the Indian Railways is currently running 10,754 daily train trips, and they need to add 3,000 more in order to cater to the demand. And it is also seen that 30% increase in number of trips is needed in order to solve the issue of the waiting list. So in this fiscal year, the target is of 5,500 to 6,000 kilometers of railway tracks to be done. Now, if we talk about the order wins and the stocks to watch out for today, the first one is Texmaco Rail, which gets interesting order of 1,370 crores approximately from Railway Ministry, and this is for manufacturing and supply of 3,400 box wagons. The order book stands at 7,800 crores at present for Texmaco, and analysts are completely bullish on the stock. The second one is Jupiter Wagons, which has also received interesting contract from Ministry of Railway for 4,000 box wagons, and the contract value stands at 1,617 crores. Their order book at present stands at 5,952 crores. Again, analysts are bullish on the stock.
And there's also Genus Power to talk about, right, Mahima?
Right.
It has also bagged an order, I believe, to provide advanced metering infrastructure service.
Right. So as you rightly mentioned, Genus Power has recently received a letter of award of approximately 1,026 crores, and this will be for providing advanced metering infrastructure, and it includes the supply, the installation and commissioning of approximately 10 lakh smart prepaid meters. Their order book at present stands at 19,000 crores, which is a huge number again. And if we talk about the FY24 guidance, the revenues have shown great numbers. And again, the analysts are pretty bullish on this stock. And if we talk about the stock performance, the YTD, the stock has given a return of approximately 162%. So yeah, this is definitely one of the stocks to watch out for today.
All right. Thanks so much, Mahima, for bringing us those details. Now, it's important to talk about the automotive space and specifically about two-wheelers, because there's an interesting trend that has been playing out over the last year and a half or so, and that is the tilt towards electric mobility. Now, we also have to talk about the latest update from Hero MotoCorp, which is that it has acquired an additional 3% stake in Ather Energy for an amount of 140 crore rupees. And the important thing to note is the context here. How has this changed the overall holding that Hero MotoCorp has in this company, and why is this a strategic move? We've got Himansh joining in to tell us more about that. Himansh, what are you picking up?
Good morning. So it's a very key move here with Hero MotoCorp increasing its investment into Ather Energy. That's one of the front runners in the electric two-wheeler space in India. Now, the company has announced a purchase of additional 3% stake into the company for a sum of 140 crores, and this values Ather Energy at 4,666 crores. Now, if you just take another key thing to note here is that Ather Energy has shown substantial growth in terms of its sales turnover as well as its volumes over the past 3 years. In terms of their sales turnover over the past 3 fiscals, you will see that they have grown nearly 5 times between FY21 and 22, and then again kept up the same pace at around 4.5 times. Their turnover was around 1,800 crores for the last fiscal. And in terms of volume, Vahan data indicates a 9-fold increase over the same period, which from FY21 to calendar year 21 to calendar year 23. So this is a strategic move in terms of deepening Hero MotoCorp's foothold in the electric two-wheeler space. But that's not all. You also see Hero MotoCorp strengthening their leadership team. They have announced that appointment of Vivek Anand as a Chief Financial Officer from March 1st, 2024 of next year. And he previously served as the Chief Financial Officer for DLF Limited and holds an array of experience across different sectors as well. And secondly, you have Rachna Kumar, who previously served as the Chief Human Resources Officer at Whirlpool Asia. She'll be coming in and joining Hero MotoCorp in the same capacity from January 2nd.
All right, thanks so much, Himash, for bringing us those details. Remember, 2 very critical trends playing out in the automotive space. One is, of course, electric mobility, and the other is premiumization. We've got lots to talk to you about over the course of the next hour before we start on bringing you the live updates from the market open. So do stay tuned for that. This, by the way, is NDTV Profit.